Hey everybody, it's me, Gregory Manarino, back for my post-market wrap-up for today, December 4th, 2017. Alright people, today is one of those days where I sit there and, once in a while I have to jot things down, and this is what I wrote earlier. What do you think? Let's go over that. Just real quick here. Okay, so the nice people over there at CNBC, they start off the day. Well, I don't know the word for it. Orgasmic is probably the word that we need to focus on here. They watched the Dow Jones Industrial Average and the rest of the indices vault higher. The Dow Jones Industrial Average is what they really like to focus on. Understand, this is 30 companies. So they want you to look at that. They don't want you to look at the broader index, for example, the S&P 500. Because the Dow makes these really big moves, and they could sit there and cheerlead about these 30 companies. Now, so they're out there today, these nice people, and they're like, well, this is tax reform. Tax reform, this is it. The whole market's going crazy. Meanwhile, let me tell you, in case you don't know already, tax reform was already priced in here. What we witnessed today, and I'm going to go over this, has nothing to do with tax reform and how the market is reacting. It's priced in. Now, let me prove that to you, and maybe you and me, we could school the people at CNBC a little bit, because frankly, okay, so as the day progressed, the market started to show some signs of weakness, and it started with tech, okay? Tech started to lose ground, and these folks over there at CNBC, they're trying to ignore it. They don't even want to look at it. They want you to focus on what the Dow Jones Industrial Average is doing. It was pretty good, like I said, almost 300 points. Now, this is when they started to get a little nervous. The S&P 500 made a tremendous reversal, and all of a sudden they're sitting there looking at each other with a blank stare, going, well, the market, something's going on here, but wait a minute. Wait, tax reform is supposed to be what's driving the markets. Or wait a minute, maybe it's not tax reform, maybe it's earnings, and, well, hold on a second. No, it's tax reform. So they're all confused. They don't know what to do. And then the day progressed even further. Deeper losses for the tech sector. The S&P deep into the red. And the Dow Jones Industrial Average, their baby, goes from being up 300 points to up only about 50. And they're sitting there going, well, wait a minute. What's going on here? Can someone help? I mean, really, that's what they're doing. They're starting to suck their thumbs. I really just can't take it. People, look, let me explain this as clear as I can for you. And I've been so accurate and so spot on with this market. I scare myself. It's the truth. So, I've been explaining to you that you need to be cautious here. There's no doubt about, especially after what we witnessed today. Again, tax reform had nothing to do with today's rally. This is a euphoria rally, and I went over in the video that I did earlier today. Again, we're seeing literally the same things that we see at the top of every single bubble. Now, here's another thing for you. Nobody, especially if you watch these people on CNBC, believes that this market has the potential to sell off right here. And do you know why? Well, because it's never happened before. Oh, well, you know what? Just because it's never happened before, I've never died before. But that doesn't mean it can't happen, like, as I am doing this video blog. You know what I'm saying here? So, look, They don't care one bit about you at all. To them, you're a piece of blank, and that's it. I care about you. It's the truth. And that's why I sit here and I watch these people spew garbage out of their mouths. They have no idea, none, of what they're talking about. Oh, it's tax reform. Oh, no, it's earnings. Well, wait a minute. The market's reversing, so it must not be that. What's going on here? Look, this market is in bubble territory with regard to valuations. I don't care what any other person out here is going to try to tell you. That's a fact, and they're going to try to sugarcoat it. Oh, no. Especially these fund managers and whatever, because they have something to sell you. Me, I don't want to sell you nothing. I just want you to listen to me because I think I know what I'm talking about. It's really the truth. And we are going to capitalize on every single freaking thing that they want to do. Look, whatever they say, whatever these fund managers say, whatever these people on CNBC that they literally pull off the street, they get some homeless person, very sad. They take him or her, give him a nice shower and shave, put him in a suit, and then okay, repeat after me, or smile and say, hey, this is what's really going on here. This is what they do. It's nauseating. It's freaking nauseating to me. You and I, all right, we have to exercise extreme caution right now. Again, nobody believes that this market is going to sell off right now. Nobody. What does that tell me? That tells me it's probably going to happen. And look what happened today. I mean, the Dow Jones Industrial Average lost 250 points from its high. The S&P 500 reverses. Tech dropping. It's unbelievable. It's freaking unbelievable. What I ended up doing today, I did not buy Bitcoin today. I'm waiting. I want to see a 10% drop at one point. I went over this earlier. And then I'll think about getting back in here. Look, as all of you know, I am multiple diversified. I am in a lot of different things. I mostly trade these markets here. And what I did do today is I bought February out of the money puts on ticker BMY. These actually made it into the money by market close. So I'm happy about this, and I think this market has a very high potential here to sell off. Will they allow this to happen is a whole other thing. Did you watch the bond market today on my website, traderschoice.net? Kind of stayed stable all day long, but there may be a run here, believe it, into the bond market as a safety play. Look, when we're looking at, I've went over this before, the intricacies of this is kind of profound and kind of daunting at the same time. And you've got to look at the environment we're in. Now, generally, when you have a legitimate, real safety play, that is cash looking for somewhere to hide because stocks are not doing well, you're going to see cash moving into the bond markets as well as in metals. All right, we're not seeing this just yet. Let's keep our eye on that. I just want all of us here to understand that regardless of what's coming out of the mouths of certain very nice people at some very nice, TV channels over there, we need to not laugh or not throw up, but we need to sit there and think that we need to be doing the polar opposite of what they say. That's it. So with that said, we got to be cautious here. Very, very cautious here. Because again, everybody is expecting this market to rally through this entire month. Everybody. And why? Because the market has never had a bad December in its entire history. So you know what that means? That means that this one's going to be just the same. They don't even consider that maybe there's a possibility that because everyone is over here, that maybe the opposite's about to happen. I'm not saying, people, especially for you trolls out there, raise your hands, raise your hands. Wow, there's very few of you out here. Anyway, I'm not saying that that is definitely going to happen. I am saying that I want you and me to capitalize on this and not lose money. So what we're doing is we're trading indexes. I happen to not be in an index right now. I only have one position right now, and it's my initial half position puts on BMY. Now they're in the money. If this thing starts to sell off deeper tomorrow, I will add to that position. You know how I play these markets if you follow my blog. I also outline this in my 100% free, no catches brief that you can download from my website, traderschoice.net. Look, take advantage of this stuff, people. Really. And we're going to. And I hope you are. You're not just sitting there like a deer in the headlights and doing nothing. Or this, like the people on CNBC who are sucking their thumbs because they have no clue what they're talking about. And it's frankly disgusting. It really is. All right, look, so I think you have a pretty good idea on what's going on here. Today's rally had zero to do with anything to do with tax reform. Nothing. It's already priced into the market, and it's been there. This is euphoria that drove the market up and fear that caused the market to sell off. Now, maybe, you know what you should do? I have a suggestion. Pick up your phone, call CNBC, and say, hey, CNBC, I want to school you just a little bit because you're frankly stupid. So maybe I can help you out. It wasn't the tax reform thing because it was priced into the market. That's what Greg Manarino says, and this guy's been really spot on. He was more like euphoria, and his proof was that the market sold off towards the end of the day. Because if it was freaking tax reform that is driving these markets or earnings, well, you know what? Maybe we would have held on to some of those freaking gains. You got it? Look, I think I outlined this for you as clear can be. If you agree, please, I would love to see a thumbs up here. If you're watching this on YouTube, I would love to see you share this on your social networks. If you are watching this on Steam It, you know, I get a lot of comments there, but very few re-steams. I'm starting to pay attention to that. So please, re-steam it. Get it out here. Let's make it happen, people. Let's do this because, frankly, I don't know what else to say. I will see you in the morning, and we're going to have more fun and more games, and then that's it. See you tomorrow.